Your financials are telling a story, but is it the right one? If you traveled, hired people, launched a product, your numbers should reflect that. Today, we show you how to instantly spot if something is missing or wrong.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving, creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Okay, so we are here. It's tax adjacent, I suppose. It is kind of like the first step that you need before you file your return.
Yeah. I don't know why I showed you this. Like, you don't know what holding hands are, but you do. They're interlocked. That's probably what I meant to say. Yeah, they're interlocked. Okay, sorry. Continue your intro.
So, financials are, I say that your financials are really a story of your business. And, and your tax return too. Everything is telling a story about who you are as a person, what your business does, what's important to your business, how you're earning your income, and just like what even happened, So it's kind of like making a memoir of what last year was like.
That's a very nice way to say it. I like it. Okay.
Yes. So when you're doing this, the first step to creating that memoir that will be your tax return is your financials. So we want to make sure that the financials are actually telling an accurate story of what is actually happening in your business. So, I mean, a lot of times, a lot of different things can kind of happen that could create a mismatch.
Okay.
And that's really what like the IRS is looking for is there a mismatch between what the expected and traditional thing is supposed to be and what you're actually reporting. And so they're looking at, what is happening in your industry, because you have to tell them your NAICS code, which gives them a little bit of insight.
Yeah.
You're giving them a short description. You're saying, is it product, service, what industry are you in? You're giving them that information. So they have a whole bunch of other businesses to compare you to, but also they have your prior years to compare to. So not only are they comparing you to industry standard, but they're also comparing you to yourself in previous years. And, are there any significant changes that aren't able to be, really described or like are really clear as to why there's a difference in that change? So, if they see that your business doubled, well, it would make sense that certain costs would also double as well, or, increase at the very least sometimes. So, so that's really what we're looking for are the relationships between all of the different things that you say are happening, do they actually match what you say are happening?
Yeah.
Okay. Because if you're saying I'm spending more money because I'm earning more money, but we're not seeing more money being earned, then now we have a mismatch in what's kind of going on here. And can we use this to tell an accurate story about what's happened in the last year?
Okay. So with I guess we should probably go back a little bit of just like, what is usually the type of reports that you get within the financials, like to kind of go through those.
So we have the profit and loss report. It's also called an income statement, P&L, and then we have our balance sheet.
Okay.
So those are going to be the two reports. The profit and loss is showing the activity of the company in a very specific time frame.
Okay.
So it's just snapshot of the business at this time, between these two time periods. So we're saying, from January to December, or from the beginning of January to end of January, this is what happened in the business at this time. It's going to show how much income you brought in, and then it's also going to show how much you spent.
Okay.
And then it normally shows the ending profit of the business, which is where you get that profit and loss coming in. The balance sheet is showing activity from the beginning of time.
Oh, okay.
So this one, if you are a single member LLC, you may not have to report. There's also some, if you bring in less than $250,000 as your gross income, you're not required to report a balance sheet. But I normally say, since you're going from the beginning of time, it's easier to always do it versus, you only file it once you're required to file it. And then you find out that there's all these issues that happened on previous returns that weren't rectified. So a balance sheet really shows all of the assets of the company. So it's your cash, anything that's cash equivalent. So like your inventory, because you could turn it into cash, a security deposit that could be cash later on down the line. So you're really looking at things that the company owns that have some sort of value that could be cashed out. And then we have the liabilities,
Mm-hmm.
which is what the company owes to other people. So that could be like what you owe for sales tax, because sometimes, you don't file your sales tax return until January
Yeah.
of the
Yeah.
next year. So, you owe sales taxes. Maybe you owe a little bit in payroll because, your payroll time cycles cross over years, or credit cards. Credit cards are going to be a big thing.
Mm-hmm.
Auto, like loans, mortgages, all of that stuff. So that section tells you what you owe people, and then the difference between the value that the company holds and what you owe to other people is your owner equity. So that's kind of like a representation of your investment in the company.
Gotcha.
And, if you sold everything and you paid off all your debts, what would be left for you to take? So that takes into account the profit that you earned this year, the profit that you earned in prior years, what you've withdrawn from the company, and what you've also invested in
Okay.
the company. So that liability, and we call that liabilities and equity. So that's kind of really what the balance sheet represents. And again, from the very beginning of time.
Okay. So if you are a creator and you are given this packet of information from your accountant, if they've never looked at these types of reports before, what should they really look at first, or just kind of focus on?
Um, really, the big thing that I look for is negative numbers.
Okay. Okay.
So,
Mm-hmm. That's
if,
fair. Yeah.
if everything has been recorded correctly, and, barring any weird situations, most of those numbers should appear as positive numbers. So we're
Mm-hmm.
not talking about like debits and credits and whether it's a positive or negative number when we do the journal entry, because that gets even. But when you receive the report and you look at it,
Yeah.
look for negative numbers.
Mm-hmm.
And if you see a negative number, does that negative number make sense? So
Yeah.
something like a refund.
Mm-hmm.
Well, that makes sense because I'm giving money back to them.
Mm-hmm.
So I no longer have that refund. So that's going to be a negative number. But if you look at it and your meals are a negative number,
That's something odd going on there. Yeah.
right,
Yeah.
right.
Yeah.
I don't really know. You paid somebody else to feed you?
No, I was just I feel like it just means that some kind of error has happened. Yeah.
Yes,
Yeah.
exactly. Exactly. So really that's like the biggest first check is, do I have any negative numbers here? And if I
Mhm.
do have a negative number,
What's
what's the
the reason
reason?
behind?
And like even on the balance sheet, I see that a lot with like credit cards
Mhm.
or bank accounts where, like a credit card, it'll have a negative number. And that's because payments are being applied to that account, but none of the expenses are being recorded.
Yeah. Yeah.
And that can happen, traditionally American Express, you only get 90 days. And then after 90-day period, QuickBooks will force you to reconfirm that you're allowing your information to be shared between QBO and American Express. And sometimes when it does that, if it goes for too long, it'll go backwards to try to make sure that it's grabbing all of the expenses. But if you let it go on for too long and you haven't gone into your system, then
Yeah.
it could
Could be
just be
missing
completely
activity.
missing a
Mhm.
couple of months, So, and I tell people all the time, I'm like, I don't pay my credit card more than I have to,
Yeah.
I'm not giving them a loan.
Yeah. Yeah.
So negative numbers are normally going to be like your biggest factor to look out for.
Mhm.
And then also reading the account names. So, like,
Okay.
do
Yeah.
all of the account names make sense to you?
Yeah. Yeah.
Because especially when we're recording things and we're categorizing stuff, there shouldn't be um it should be very clear
Mhm.
that a certain item is going expected to be in this account and nothing else should be in this account.
Yeah. Yeah.
Because that's also what the IRS is going to be looking for. If you have business meals, then there should only be meals in there
Mhm.
that you're having with clients or for the convenience of the employer or something like that. Like there should be a very set definition of what falls into this account and
Mhm.
just making sure you understand what those definitions are. And some of them are really super easy, like parking.
Mhm.
That should have all your parking,
Yeah.
fees in there.
Airfare. Should have
Airfare.
lights.
Airfare, yes.
Yes.
So some
Okay.
of them are very
Mhm.
direct, but other ones, sometimes like if you have a supplies and materials account, like what actually counts as my supplies and materials
Mhm. Mhm.
versus something that might be like cost of goods sold.
Yeah.
Like
Yeah.
what's the difference between, you know, um, what am I classifying as a direct expense that's related to a very specific order
Mhm.
versus something that I'm using for multiple orders
Yeah. Yeah.
that can't really be, like attributed to any one thing,
Mhm.
you know?
Mhm.
Um, so just making sure that you understand what those definitions are. And then once you know what those definitions are, then you can look and say, like, does that actually make sense?
Yeah. Based off of your own purchases and stuff, because you
Right.
know what you've been
Mhm,
spending as well.
mhm,
Mhm.
mhm. Yeah, because there's certain cities, like, even if we take the parking example, there's certain cities where there's not really a need to pay parking fees all the
Mhm.
time because you can just go into a parking lot and you park for free and everything's fine. But there's certain cities where you're paying a parking meter every time you need to stop your car because parking is so limited.
Mhm.
So you're going to see different relationships between that. And especially if you're traveling a lot, does that make sense?
Mhm.
And I mean, a lot of times, especially in bookkeeping, that's where sometimes we catch like the fraudulent activity
Mhm.
because, all of a sudden we're recording like travel meals, because there's like meals in Oregon. The person's like, I have never been to Oregon at all. So like, why,
Yeah. Yeah.
why are there travel meals sitting
Mhm.
here if I didn't travel anywhere?
Mhm. Yeah.
So um, that's where, like I said, where we're looking for some of those relationships that are
Okay.
happening.
And then, so looking at the numbers, looking for the negatives, looking at the accounts that are like where those numbers are there any other kind of questions that you can ask as like a client to your bookkeeper about the numbers without like coming across dumb, I guess, which I don't know if any of it really would come across dumb because we work hard on it. And so I'm happy to explain why we put something somewhere. But yeah, do you know what I mean? Like, is there
Mhm,
any other like
mhm.
things that they should be like asking?
And that's really kind of what it is. There should always be a very clear answer as to why this is happening,
Yeah.
but it's also your responsibility to understand that why.
Yeah.
Like just
Yeah.
because it makes sense to your bookkeeper and it's best practices and this is what the IRS is expecting and all of those things, like none of that matters if you don't understand.
Yep. Yep.
So it's better for you to ask the questions. And even sometimes, too, like I always say, just because this is standard for a different industry
Mhm.
doesn't mean that it's standard for your business. So that's where telling the story really comes into play, is because, maybe it might be personal or it might be research related to somebody else. But for you, it is actually, like really business related,
Yeah. Based off
so,
your industry and what you do. Mhm.
mhm,
Mhm.
mhm. So, I mean, like we have people that, they go to the national parks and they take photos there. So they have like, they have to pay a fee in order to get to those national parks.
Mhm.
It's going to be a different classification for that photographer that's
Mhm.
doing all of that outdoor photography than it would be if I decide to take all of the employees to a retreat out into the mountains
Ooh.
because we want to get away. Um,
Say more. I wanna go to the mountains.
gonna leave you out for the bears. Yeah. So where we're like, so that's where you have to kind of take into consideration just because it's should be in one section for one business doesn't necessarily mean that it should be in it that like it's the same thing, but it's used for very, very different purposes. And
Mhm.
so, like I said, when we're telling that story, um, what story is actually being told here? And, you're always kind of playing this little game of telephone
Mhm.
across
Mhm.
everyone. So, and like you said, every bookkeeper, we do this because we want to do a good job. We like you. We want to understand all of this nuance.
Mhm.
So, just even asking the questions or just making sure that the bookkeeper has a little bit more information because a lot of times, like you go to a bookkeeper and you don't realize how much they end up knowing about you.
Everything.
Right. So,
Mhm.
like, you don't necessarily recognize like how vulnerable and how open you have to be about your reasoning behind why you're doing these things and
Mhm.
why they're the best things for your business. And sometimes that's just communication that you need to make sure that is being transferred over to the bookkeeper so that they're able to better represent the story of your business for the year.
No, that's great. So you've already touched a little bit on examples of like numbers not matching the reality of the business, but do you have any other like
Hmm,
kind of
hmm,
examples
hmm.
just to like have a couple out there?
Yeah. So, I mean, a lot of the times I'm looking for what happened last year.
Mm, mhm.
So I can look at what's the number this year, what's the number last year, and are there any significant changes
Mhm.
between the two? And do those changes make sense?
Yeah.
You know, also, I'm looking at the monthly information. So if I know every single month I have to pay $150 for the business telephone, then I should see every single month $150. So, a lot of it is going to be that just kind of like pattern
Mhm.
recognition.
Yeah.
But also just knowing like, okay, I took a trip to China in June, so I should see a bunch of travel in June,
Yeah. Yeah.
you know? And so just being able to say like, okay, this is what I did, or, like I paid for a huge marketing campaign, but, and it went live like during the last bit of the year because we did a whole bunch of Black Friday sales. So we like really did a whole bunch of stuff like that should appear
Mhm.
in your financials
Yeah.
and you should be able to like track the ebb and flow of the company
Mhm.
throughout the year, or maybe nothing has changed and everything stayed the same because you're just doing the same thing that you did, that you've always done.
Mhm.
And none of those, and neither of those are, neither one is better than the other or what have you.
Mhm.
But you're just making sure is everything that I'm seeing consistent with what's happened last year and with the world as I know it,
Mhm.
you know? And even sometimes, like I said, if I know that I take my clients out to eat all the time, because it's easier to have like real conversations with people when they're like doing something that's distracting them,
Yeah.
or
Yeah.
something like that. Or maybe it's just like a very, you have to create these like really personal relationships with people. So, like,
Mhm.
we go out, we get something to eat, we get to know each other more on a personal level before we build to these like stronger, like really rigid business relationships, then I should see a lot of meals,
Mhm.
like real estate agents, they drive all over town. So I
Mhm.
would see them just like driving here, driving there, having a lot of gas and, going to the gas station, getting a drink or, like
Mhm.
whatever. They have a lot of more repairs, like they're buying tires more frequently than other people, but there's just different relationships that you're able to see and identify as you're looking at the financials. And then, like I said, just even knowing what's important to one person
Yeah.
versus another,
Yeah.
you can kind of like tell who the person is from there. Mhm,
Oh, okay.
mhm,
And
mhm,
then you've did touch on this a little bit too with like the negative numbers or like that they do travel content but there's no travel expenses and stuff. But are there any other like major red flags that you're kind of looking at when you're reviewing a like P&L or balance sheet?
mhm. I mean, so, I mean, for me as the CPA,
Mhm.
really, I'm I mean, I'm just saying like, okay, tell me a story.
Mhm.
Tell
Mhm.
me what happened, you know? And
Mhm.
they're like, oh, I bought a car, I moved across country, or I had a baby, or, like, and then I'm like, okay, well, tell me more about this. What,
Yeah.
what exactly happened here? Or, and different things like that. And then that's what I'm trying to look for in these financials. So if you say that you bought a new car, for the business because, you have to travel and what have you, or you needed a larger vehicle because you have to move more gear, then okay, I'm looking for that larger vehicle. So I want to see that you're selling something and you're buying something else. Like,
Mhm.
so I'm already kind of self-translating some of that information for you.
Mhm. Mhm.
But especially if you're doing it on your own, and sometimes, I mean, you kind of know, like, do you eat out a lot? And you'll say, like, okay, that number looks a little bit lower than what I would expect. Or,
Mhm.
like, I feel like I have a lot of subscriptions. So why does this only say $10? Like,
Yeah. Yeah.
let's dig in a little bit more. And sometimes, too, what I'm looking at, and the biggest indicator is going to be I want to see what your profit is and what your bank balance is.
Ah, yeah. Yeah.
Because if I look at your profit and I look at your bank balance, and then I also look at how much money you've withdrawn from the company, and there's something
Like, not. Yeah.
missing,
Yeah. Yeah.
then I'm gonna say like, okay, because if your profit and loss says that you made $100,000, but you have $500 in your bank account,
Mhm.
there's some kind of disconnect there.
Mhm.
So
Mhm.
either you took a whole bunch of money out and, you know, or what have you, or there's just something
Something's missing.
completely missing.
Mhm.
And a lot of times, people will tell me, because if they took all that money out, then they're like, yeah, I'm going on trips and I'm living the big life and I have this pretty new outfit on and whatever, or I live in this like gorgeous apartment and, they're showing me that, or they're saying like, I am so broke right now and I don't know how I'm going to afford things and what have you. And then I'm like, that seems weird because
Looks like you
this,
made this. Yeah. Yeah. Yeah.
right. So then
Where
that's
did it all
where,
go? Yeah. And then figuring that out. Mhm. Mhm.
let's follow the money trail. Let's see where everything is going because the story that you're telling me is not the story that I'm seeing here because the story that I'm seeing here says that you should more than be able to afford your rent every
Mhm.
single month. So
Mhm.
if you feel like you're not able to, then
We got to
what am
figure
I
out what else
missing?
is going on here.
Mhm,
Gotcha.
mhm,
Okay.
mhm, mhm.
For like the little last bit here, is there anything that creators should do to get more control over their financials? Just like best practices for them of like kind of understanding more?
I mean, like I said, just ask all the questions.
Mhm.
Like, there is no expectation for you to understand everything.
Yeah. 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 Of
Like I
course
said,
not.
like, even if you are a business owner that's really heavy into financials and you understand all of these things, you are focused on your business.
Yeah.
So there are going to be certain things that kind of go past you or different relationships that maybe you don't recognize because you're so busy servicing
Mhm.
everything else and making sure that you're earning the income that you need in order to support yourself and your family. So um, there's there's never a dumb question. There's never anything. And at the end of the day, it's your responsibility to understand what's happening here.
Mhm. Mhm.
And making sure that this is being translated in the right way. And there's a lot of things that, like I said, maybe they don't necessarily seem significant to you, but because you're playing this weird game of telephone and kind of like
Mhm.
telephone with the IRS, then maybe it is significant and you just don't realize it.
Yeah. Yeah.
So asking the questions, and I tell people all the time, I'm like, I might ask the same question 3 times, and it's not necessarily because I don't know, but I'm checking to see if you're ready to open up and give me more information about what it is.
Mhm. Tell us all
Kind
the
of,
tea.
but that's really
That makes
what it
sense.
is. It's
Yeah.
just keep asking questions. Make sure that you understand. There's no such thing as a dumb question.
Mhm.
We always want to help. We always want to make sure that we are doing what's in your best interest.
Yeah.
So, obviously, I don't like everybody feels bad if they do something wrong, but at the end of the day, whatever is in the best interest of you and your company is what we're all fighting for. So even the IRS, because that's how they make their money, is you continuing being in business. So
Yeah.
if everybody is on your side, everybody wants you to be successful. Just make sure that you feel like you have the tools in order to do so. And if you don't, just raise your hand. We're more than happy to help.
Raise your hand.
So if you would like to raise your hand, put a comment below, send us a message, and we are more than happy to kind of talk through your particular situation and give you a bit more information about what's going on in your financials. Bye.
Thanks, guys.
That's a wrap on Let's Get Fiscal.
Ready to stop guessing and start saving? Click the link in the show notes.
Grab your consult and let's make your business work for you.
Not the other way around. You've got this.